Good morning and welcome. Patriot Radio News Hour. It is Tuesday. I'm Joe Jaquin, CEO of the Patriot Trading Group. And, well, the thermostat is hot and only going to get hotter. That's what it's going to be. The mega drought is here. I was just reading another report about Lake Mead Hoover Dam. Get ready, Arizona. I got bad news for all of you out there expecting inflation to be transitory. Food prices are going to become a lot more expensive as Arizona now. You know, we have more. I don't want to oversell like we got all this farming, but we got quite a bit. You'd be surprised once you get out of town. The cutoff's coming. Matter of fact, I think in the next 30 days is what we're anticipating. Lake Mead will have dropped below the level, and Nevada and Arizona get hit first. They're saying that by next year, farmers could expect possibly all of the water they get from the Colorado River to be cut off. You can't drill that many wells. You just can't do it. And I told you yesterday, remember, I got some friends up in Northern California, what the farmers were saying there. So buckle up. Going to be very interesting. The reason why am I talking about it? We're going to have inflation data out Thursday. But I got a great show today. I got such a great show. We're actually going to do a little check on these bankers. We're going to go back in time. Not too far. You know, but we'll go back to the last crisis. And I'm going to read you comments from the central bank and see how accurate they were. Then I'm going to go back just over the last 4 years. 5 years, where all of these quote-unquote geniuses were projecting interest rates to be and inflation to be. So it's going to be great. We're going to, to the point where, this is their job. Almost kind of like, okay, wait a minute. Yeah, you're not very good at your job. Maybe we need to start firing these people. Don't you think? Shouldn't there be a criteria? Hey, listen, you're basing all of your monetary nonsense on these projections you keep throwing out every 6 weeks. Oh, yeah, let's have another press conference and have another meeting. We got the MIT Mafia working. And based on your projections, you pretend that you know how to control policy and that your monetary policy can control what's happening in the economy. And here's the honest truth. Nothing could be farther from that. It's absolute. They're nothing more than bovine specialists. How's that? It's a load of crap. They have no idea what they're doing. They're guessing. And you know what? Here's the problem. Their guesses, let's just say they're educated guesses, right? Because you got data, lots of it, are horrendous. And really, I think we should just be like, you know what? You've guessed so poorly, you're fired. Let's get somebody else in here that may have a better idea of how to read this data. So that's going to come up. That's what we're focusing on today, because Thursday is going to be a big day. Big day. How bad the fake inflation, because they're not actually going to report real inflation. We're talking about the CPI. They're going to report their fake inflation that they've manipulated that so it doesn't reflect inflation at all, but we're going to see that number. That's what everybody's waiting on. So we'll get to that in the next segment. I just want to talk about Patriot for a minute. Obviously, we've been as busy as the company has ever been. And we're still breaking records. But, we had yesterday as an example. We had a new customer in here, and every day now, more and more new people are getting and understanding, hey, you know what? I got to smarten up here a little bit because these guys truly are clueless. And I went out and I started talking to him, and he said to me, this kid was under 30, good-looking kid, says to me, I want you to know the only reason why I bought from you, and he points to Brittany. And he goes, I called a bunch of places. And I get it, right? People, you're trying to educate yourself, and maybe, you know what, I'm gonna call he goes, everywhere I called, they were rude. They didn't want to answer my questions. They made me feel stupid. Except when I called you guys. And he goes, I'm buying from you from here on out. And this isn't the only one. That over and over and over and over we hear this message. A little while later, I get a call from one of our customers. Her husband had passed away, and he was the one that kind of was, knew what was going on. And she said, Joe, we used to buy from a lot of people until we found you. And she goes, I just want you to know it's so refreshing to talk to someone. And she goes, you just tell us what it is. You take your time. You're truthful. That's not what you get from most other places. It's what separates us. Believe me when I tell you. Call us. We're going to help you. Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Here on this Tuesday. And we're waiting for this CPI report. And it's so funny, right? Right? Giving credence to something they know isn't true is ridiculous. And there's nobody out there that actually believes this number's accurate. But when you turn on the idiot box, they'll swear to it. Matter of fact, you should base your whole financial well-being on a steaming pile of dog crap. Yep. Because that's only smart. Yeah. Don't fight the Fed. You've heard them say that all the time. Well, how good of a job have they really done? Because remember, first, go back to 2020, the end of 2020. They told us there wasn't going to be inflation. Now, that's what they said. And, of course, the stock market cheered, right? Yeah! Gold fell, remember, right? Gold hit an all-time high and then went all the way down to $1,670. Because the central bankers were out, not just Jay Powell, all of them. They'd come on TV, they did interviews. We've got all kinds of records of it. Even the lunch lady, Janet Yellen, was, oh yeah, go big, baby. It's fine. We got a new modern money theory. We can just print money. Again, we realize now, just think about this. We pay an extra $300 a week on top of unemployment for people not to work, and then we sent them, a couple $1,000. And all of a sudden, we got inflation everywhere. So that theory's a load of baloney. Then, fast forward to March, and they kind of changed their tune. Just a little bit. Okay, there's going to be some inflation. Okay, but don't worry, it's just going to be transitory. Now they're doubling down on that. Now we've gotten a lot more than some. But they're sticking to the transitory for now. So I started to think to myself, and I use this example about Ben Bernanke and the housing crisis and how wrong they were. And I was like, man, it'd be great if we could just go back and, let's roll the tape, right? and hear all of the asinine comments that they've made and that all of us have had to base our financial well-being on. Because remember now, the dollar's gone from like 103 to 89. And I'm going to tell you right now, it's going a lot lower. A lot lower. But the whole time they're saying, no, it's fine. Well, somebody else was thinking the exact same thing. Mish from Mish Talks, he's fantastic. He's another guy that I always look at and see what he's blogging about and writing about. He Mish Sedlock, for those of you that don't know, he's a popular guy out there. He actually did some research, put some things together. What things we know, what the Fed says is not nearly the same as what they believe. Okay, so that would imply, Mish is implying, hey, they lie to us. Because we're dumb. They think we're stupid. I want you to know this. Matter of fact, the central bank makes their living on us being dumb. They do. I would love it if Jay Powell would sit in front of me and we could just go. Let's just talk facts. Let's go one-on-one, point for point, and who would win. The Fed's track record on inflation predictions, housing predictions, bubbles, dot plots, right? And literally everything else has either been one or the other. A big set of lies or a big set of misses. Or maybe, I guess it could be one, or a combination thereof. So there's our three choices. Either they're just lying, which is what I believe. Can I prove it? No, but that's what I believe. They're lying. Because they can't tell us the truth. Could you imagine? Right? Hey, inflation's really 12% and going to get worse, and we can't raise the rates. We can't save ourselves because if we do that, it's going to cripple everything else. And yeah, we screwed you over, and we're going to need a new currency, and everyone needs a big fat haircut. But maybe it's just mistakes. Maybe it's both, right? So he went back to their meeting on December of 2016. Okay. And they call this the dot plot, which this is another thing that's gained a lot of credence in the Janet Yellen era. And all as it is, because I know it's radio, you can't see it. Just picture a piece of paper, like a graph. And on one side of the graph is numbers. These numbers are supposed to represent the Fed's funds rate. So the number on the dot plot only goes from 0. It's funny they don't have negative on there. It'd be interesting. 0 to 4%. Now remember, at the time, that Fed's funds rate was, they were getting ready to raise rates and all that stuff. Remember, right? This is when gold really started rallying again, right? Gold went to 1,900, went back to 1,050, started climbing up, and then starting in 2016, started to go higher. So the day of the meeting, interest rates were at 0.5%. And what the central bankers do, is they needed to put a dot as to where they thought inflation was going to be in December 2017, 2018, 2019, and then what they called longer run. So they had to put 4 new dots 2017, the vast majority of respondents said interest rates would be between 1.25 and 2%. Only 3 of them had it below 1. In 2018, the vast majority have had them at from 2% all the way to 3.25%. Only 1 had it below 1.75, and that person had it at 0.5%. I don't know who that person was, but he was probably the only one that knew what the hell he was talking about. Problem was, by the time he got to his dot in 2019, he had lost it as well. 2019, 2.5 to 3.75. Now, in 2019, right? Remember, 2019, we had all the people forget. Remember, that's when the taper ended, right? The Fed started having to add to its balance sheet again, right? Interest rates were back at 0. Longer term, so this is more than 4 years. By the way, the lowest person in 2019 was 2%. Longer term, no one had it below 2.5. The majority of them thought that the Fed funds rate was going to be 3% or more. Not one of them was right. Matter of fact, I would argue that whoever had 3.75, he probably should be fired because we were at 0. They did the same exercise in 2017. So they come out to 2017, and again, this time they're saying, well, inflation, and I won't bore you with all the details, but from 2019 to longer term, 3%. The actual number was 0. 2018. This was the best part. By a 12-4 margins. So there's 16 total bankers. 12 from the Federal Reserve Bank. Then you've got the Fed president. Then you've got the vice, the vice chair and blah, blah. There's 16 votes. By a 12-4 margin, all of them expected rate hikes in December of 2018. In 2019, only one respondent said the Fed was done hiking. Of course, the Fed they were done hiking. They were going to 0. Other participants thought the interest rate would be over 4% by 2021. See, we fixed it. The longer-term chart, again, at least some of them were getting a little leery. And again, I got to remember, this was 2018. And they were all talking about where they thought rates were going to be. Now, remember, the Fed's funds rate has essentially been 0. And now they're telling us inflation's only going to be transitory. Yet their own predictions for years about where inflation and interest rates were going to be, no one was, not even one, not one had it at 0. Matter of fact, the lowest one, 2.5% for a Fed's funds rate. They have no clue what they're talking about. They're so overly optimistic about their own, I don't even have the right word, about their own belief in a flawed system. It has to be that they're lying. None of them could really believe this. They're not even close. Let's go back to 2006. Well, I guess before we do that, January 6, 2020, former Fed Chairman Ben Bernanke, right? Remember him in the whole little housing bubble, subprime crisis, right? The whole banking system went under. This moron was out there on TV telling everybody it's a subprime crisis and it's contained. Doesn't this sound exactly what they're saying about inflation today? First, they said there wasn't a housing crisis, right? Remember? Oh well, no, it's just subprime. Well, it's subprime, but it's contained. Think about it. There's not going to be any inflation. Well, okay, there's going to be a little, but it'll be transitory at best. Okay, maybe it's going to be a little hotter than we thought, but it's still going to be transitory. Same thing. And he was saying about how all the tools they had. I'm going to go back and read comments from Ben Bernanke starting in February of 2007. I think this will give us a good indication of where inflation's really going to be headed. 800-951-0592. That is our toll-free number. Listen, I'm telling you right now, I'm going to read to you all of Ben Bernanke's comments. And this is going back to February 15th of 2007. Gold had already hit an all-time high, came back from 1,700, boom, was going to 1,900. Now, gold's already 1,900, well, 1,893. But let's just say gold's 1,900. And instead of Ben Bernanke or Janet Yellen, it's Jay Powell. Different problem. Different problem. Same lies. That's why I'm telling you, and I've been saying this for a year and a half, be heavy in your gold and silver right now. You can lighten up later. Believe me, between now and 2025, this is going to look like a much, much different world. With a lot higher gold and silver price, unfortunately. So think about this. February of 2007, the bubble in Phoenix had already burst, right? I mean, anybody that lived in the valley knows, like, by summer of 2006, it was over here. February 15th, 2007, Ben Bernanke says at the Fed press conference, overall economic prospects for households remains good. The labor market is expected to stay healthy, and real incomes should continue to rise. The business sector remains in excellent financial condition. 6 weeks later, March 28th, 2007, the impact on the broader economy and financial markets of the problems in the subprime markets, talking about housing, seems likely to be contained. It's funny that he put the word likely in there. Was that his way of saying, well, I didn't lie? You know, I said likely. I didn't say it was likely to be, but I was wrong. 6 weeks later, right? And remember, the Fed meets every 6 weeks, right, to give us their way of trying to say, we're here trying to help everybody. Don't blame us, even though they're the ones that have actually caused all of these problems. The inflation problem today, it's the Federal Reserve's fault. Rates, you can't have rates at zero. You can't print money. You can't have prosperity through a printing press. They know this. They don't care. May 17th, 2007. We expect significant spillovers from the subprime market to the rest of the economy. Oh, I'm sorry. Got it, boy. I was like, wait, he told the truth. No. We do not expect significant spillover from the subprime housing market to the rest of the economy or the financial system. Fast forward to May 27th, 2008. February 27th, 2008. By later this year, by the way, this was right before Bear Stearns went under. By later this year, housing will stop being such a big drag on GDP. I am satisfied with the general approach we are taking. The very next day, February 28th, among the largest banks, the capital ratios remain good. And I don't see any serious problems. Among the large, internationally active banks that make up the very substantial part of our banking system. See, right, the banks that are too big to fail, I don't see any problems. Their capital ratios, they're fantastic. Of course, Lehman Brothers goes under, Bear Stearns goes under, right? Who was it? Was it the snow job or Hank Paulson came out on TV? Wall Street won't open tomorrow if we don't bail them out. June 9th, 2008. The risk that the economy has entered a substantial downturn appears to have diminished. See, oh wow, they fixed that pretty fast. And it's done so over the past month or so. 6 weeks later, July 16th, said that Fannie and Freddie Mac are adequately capitalized and in no danger of failing. Right? And then, of course, what happened? Boom, Fannie and Freddie get bailed out. Right? And I only point this out because this is the pattern we see at every crisis. It's shocking. Who was it? Was it Einstein that said, doing the same thing over and over and expecting different results, right, is, the definition of idiocracy, right? That's what we have here. And we talk about, and I love, they want to tell you Donald Trump's a narcissist, which he is. But don't be fooled. The biggest narcissist of all are these central bankers. And you sit there and you think about what Ben Bernanke was telling the public. I don't believe for a single second they didn't know the truth. That's just me, though. And now we're listening to Jay Powell talk the same kind of nonsense as the next crisis is here. The only question for this is, are you going to be prepared or are you not? Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. Patriot Radio News Hour. Just like Fauci, the Federal Reserve has a vested interest to lie. The wolf is guarding the hen house. The biggest wolf of all, Janet Yellen. They are ushering in, and remember, they had an original mandate. They were supposed to, prevent bank failures. That was really their initial reason why they said that they wanted to have a central bank. We went most of the country's life without one, up until this version. And I won't go into the details. It's for a different show. But read the Creature from Jekyll Island. That'll just tell you all you need to know. All as they care about is their system, which by their own admission is to devalue the currency, devalue your labor, and eventually go to zero. How do I know this? Well, the answer is simple. Look up every fiat currency. Every one. Do you know who created the first one? It was the Chinese, the Ming Dynasty. Do you know why our founding fathers said the currency needed to be gold and silver? It had everything to do with the Boston Tea Party, which had nothing to do with tea or taxes or Indians. I know, because that's what you learned in your history book. It all had to do with England made the colonists trade their silver and gold for scrip, which is another way of dollars, fiat money. And they were supposed to use that instead. And then, all of a sudden, the merchants and the traders in England were like, we don't want the scrip anymore. We want gold and silver again, right? And the colonists were enraged. See, our founding fathers knew explicitly the dangers of having bankers be in charge. Now think about what the Fed's in charge of. They're in charge of employment, a stable dollar, which it's very stable. Yeah, stably goes down. Right? Stably devalues. Just ask them. Of course, now it's going to be a little unstable, but don't worry. When it's unstable, we'll just say it's transitory, and that means it's fine. Climate change, right? Oh, yeah, we're going to be behind climate change, right? And I'm sure inequality, they got to fix inequality, and I'm sure somehow they got to fix the LBGQTP, elemental P problem. This is pure nonsense. And I'm going to tell you, just like we saw, here's the problem. During the financial crisis, as they like to call it, the deficit was, 6-7 trillion? 8? Now we're approaching 40 when you factor in the Fed's balance sheet, right? Because remember, the Fed's balance sheet the first time around was only $700 billion. It's $8 trillion. We've got almost $40 trillion of debt. Think about that. I mean, from 2008 to 2021, it's 13 years? We've gone and added $32 trillion worth of debt. About 30 trillion, be fair. We're not quite at 40 yet. $32 trillion in 13 years? Wow. See, that's how they pretended that everything's okay. Is they've blown up the debt to even bigger proportions. And see, this is the problem. This is the trap. Because you're going to hear a lot of people talk about, the Fed's going to start tapering and the Fed's going to start raising rates. The Fed does that. This debt bubble, this $40 trillion debt bubble blows up. If you thought the banks were insolvent in 2008, if you thought Fannie and Freddie were insolvent, then wait till you see what happens today. Think about it. Moratorium on mortgages, right? Moratorium on rents and all this other stuff they've done that they haven't told. No one had to pay their school loans, right? I mean, all of these things are laying in wait. And now we've got inflation everywhere, in every little thing. You know what the latest thing is now? Apparently, coronavirus is going through the Taiwanese semiconductor industry. And now they're saying the chip problem is going to last till the end of 2022. Right? That just means what? Things are even more expensive. Drought, more expensive. This, more expensive. I already told you, crude oil is going to be $100 a barrel. Mark my words. Patriot Radio News Hour, final segment coming up. Got a couple of specials for you. Take advantage. Listen, add to your portfolios. They have a vested interest in lying. And this is the problem. They're lying. You know it. I know it. Everybody knows it. Just be prepared, and we can all reap the benefits. That's the best part. If you prepare, you come out the other side a lot better off. Patriot Radio News Hour, final segment coming up. 800-951-0592, Patriot Radio News Hour. Yesterday, we were running the half roll of Morgan, half roll a piece. So you get 10 Peace dollars, 10 Morgan dollars in a roll. We actually had 200. I said 100. We actually had 200. We have 31 rolls left. They're at $700 a roll. So this is a roll you get half Morgan dollars, half Peace dollars for $700 today. Right now, silver's at $27.75. Gold's down $3, $18.94. The Dow is kind of mixed. The only thing up today was crude oil. We get oil inventory reports tomorrow. If those come in, I guess bad or hot or whatever, a bigger draw than expected, look for crude oil to break above $70 to the barrel tomorrow. We'll have to wait and see what those provide. On the gold side, $5 liberties. Man, they're expensive. I'll just flat out tell you, $605. There are hardly any out there. $20 gold, Liberties, Saints. We can get them. We can get plenty of them for $2,185. Right now, the sweet spot in the gold market continues to be the $10 Liberty. It's the cheapest way to buy gold right now. Think about it. We were at $1,050, then we're at $1,060, and I told you prices went up again. We got $10 Liberties. They're $1,070, but still, that's such a great deal. I mean, that's $2,140 for 2 10s. That's still $45 less than $120. So buy the 10s today. It's the best deal, and you know how we are here. We want the best gold that allows you to stay private. In other words, you can buy it, sell it, trade it. You don't have to worry about 1099s and giving out your Social Security number, all of those things. And we want you to buy it at the best price possible. Today, that's on the $10 gold pieces at $1,070. And like I said, we got only 31 rolls left of those Morgan piece rolls. They're not going to last. They're at $700. I mean, the Morgan and Peace dollar market is absolutely exploded, like all the rest. We're sitting there and we're watching, and everyone's going to put all this credence in this garbage report Thursday, because that's what it is. It's garbage. That's still going to say inflation is way, way hotter than they promised. Right? They promised us, oh no, we just want to devalue your money by 2%. That's what 2% inflation means. But we're going to see a number tomorrow that's 4, maybe 5. Which we know is more like 11 or 12. And you know what they're going to say? It's okay. It's just transitory. We're not going to fight. That's like a house is burning. Here comes the fire department. They see the house is on fire. And then they said, we're just going to let it burn to the ground. We could put it out. But it's just going to, because once the house burns to the ground, the fire will be over. Right? I mean, that's essentially what they're saying. Hey, once the house burns to the ground, the fire will be out. Of course, the house will be gone. And this is exactly what they're telling us, too. because they're done with the dollar. They're tired of the dollar. Its days are numbered. 800-951-0592, Patriot Radio News Hour. God bless everybody. I'll be back tomorrow for a hump day.